Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal. It's the 16th of November 2023 and here are the questions we will be answering today. What are the fiscal implications of extending PMGKAY? What led to the rise and fall of Sahara's Subrata Roy? How will the primary market shape up in Samvat 2080? And what is the PMPVTG Development Mission? Addressing an election rally, Prime Minister Narendra Modi on 4th of November announced that the centre will extend the Pradhan Mantri Garib Kalyan Anna Yojana or PMGKAY scheme for the next 5 years. The scheme was launched in 2020 to provide essential food grains to the vulnerable sections of society during the COVID-19 pandemic. The announcement has triggered discussions about both the potential benefits and economic impacts. Abhijit Kumar looks at the financial implications of the extended scheme.
The Pradhan Mantri Garib Kalyan Anna Yojana or PMGKAY scheme introduced in 2020 was a flagship welfare program of the centre aimed at providing essential food grains to vulnerable sections of society during the pandemic. The scheme, which is an extension of the National Food Security Act 2013, targeted over 810 million beneficiaries to ensure access to adequate food supplies. The centre, under the PMGKAY scheme, provides 5 kg of free food grains per family member per month to the beneficiaries. This was in addition to the Antyodaya Anna Yojana and priority household schemes, under which the card holders were entitled to 35 kgs of food grain at 1 to 3 rupees per kg under the National Food Security Act, provided to them through the public distribution system. But it all changed in December last year. The government approved an integration of food grain schemes of Antyodaya Anna Yojana and priority households with the provision of the PMGKAY scheme for 2023. The move put an additional burden of 15,000 crore rupees in a year on the government's coffers and increased the total food subsidy burden to 2 lakh crore rupees. The government's spending on food subsidy in FY 2022 was nearly 2.9 lakh crore rupees, while for FY 23 the budget estimate for the subsidy was 2 lakh crore rupees. The revised estimate was pegged at 2.8 lakh crore rupees. For FY 24, the government has allocated 1,97,350 crore rupees, lower than the last fiscal. But economists believe this cost is set to rise. Out of the 1.9 lakh crore rupees, the centre has exhausted nearly 45% or 95,149 crore rupees till September. But what about its impact on India's overall fiscal position? The country's fiscal deficit for the first half of this year till September was at 7.02 lakh crore rupees. That's 39.3% of the annual estimate. The fiscal deficit had already widened from 37.3% in the comparable months of FY 23. In September, when the scheme was extended till December 2023, the Finance Ministry had also flagged concerns over the financial implications of the additional 44,762 crore rupees and said it did not support the move. However, N.R. Bhanumurthy of Dr. B.R. Ambedkar School of Economics, University believes that the impact of the PMGKAY extension will be limited.
Fiscal implications of extending the PMGKAY for next 5 years is estimated to be very minimal. Both Finance Ministry and the government are very clear that extending this is not that expensive compared to what everybody felt, because the program is merged with the old National Food Security Act. So whatever the beneficiaries were paying, like 1 rupee or 2 rupee or 3 rupee kilo for the food grains, that is what is exempted. So to that extent, I think there are some calculations around. So the burden on the exchequer would be somewhere close to 10,000 to 12,000 crore per annum. You know, one of the important SDG goals is nutrition. So I think if you want to achieve the 2030 goal, the small expenses of 10 to 12,000 crore per annum is not a big bill in my view.
Economists point out that the cost incurred by the Food Corporation of India to procure food grains is set to increase in the coming years driven by food inflation and subsequent rise in the minimum support price to farmers. The centre collects approximately 1,250 crore rupees per month from beneficiaries for the sale of food grains, totaling around 75,000 crore rupees in the next 5 years. However, under the NFSA 2013, the central issue price for food grains and cereals has not changed. Consequently, there is a risk that the deficit in the government coffers may expand. Economists argue that finding a balance between fiscal responsibility and social welfare is imperative. Former Principal Economic Advisor to the Planning Commission, Pranab Sen, points out the challenges associated with public distribution system.
When you are talking about sort of anti-poverty programs, of which this is supposed to be a part, although it covers much more than just the poor, it mostly has to come through the budget. I don't think there's any escaping that. And that is perfectly legitimate. It's a part of any government's function to look after the deprived and the poor. The issue is this the right way of doing it? Are you targeting it properly? Which means how much are the leakages that are happening? But if you think about the alternative, which is if the government stopped giving subsidized food grains, then the government would have to sell that in the open market. So the government would get a lot more, but it would generally drive down the prices of food grains in the open market.
Extending the Pradhan Mantri Garib Kalyan Anna Yojana demands a nuanced evaluation of social and economic factors. Economists propose a more targeted approach for the welfare scheme to enhance its effectiveness in supporting the poor while maintaining fiscal prudence. Failure to do so could turn the well-intended scheme into a potential concern for the government, both financially and electorally.
The extension of the Pradhan Mantri Garib Kalyan Anna Yojana is a positive move towards ensuring food security among the poor. But the timing of the announcement is being seen as an attempt to reap political benefits ahead of the Chhattisgarh Assembly election. In a separate development, Sahara Group Chief Subrata Roy passed away on Tuesday at the age of 75. Roy's legacy is marked by a journey of humble beginnings in 1978 to the establishment of Sahara India Parivar. Throughout his career, he faced numerous regulatory challenges and legal disputes related to his group firms. Here's a report on what led to the rise and fall of Sahara's Subrata Roy. Subrata Roy, the chief of Sahara Group, passed away at the age of 75 on Tuesday evening in Mumbai. He succumbed to cardiorespiratory arrest following a prolonged illness. Once an influential businessman of the country, Roy leaves behind a legacy marked by controversies. Subrata Roy embarked on his entrepreneurial journey in Gorakhpur. He started with the business of selling salted snacks on a Lambretta scooter under the banner of Jaya Products. The venture failed, and in 1978, Roy founded Sahara India Parivar as a small finance company. Over time, the modest company expanded to various industries, including real estate, finance, media, tourism, and hospitality. Subrata Roy had a diverse business portfolio, including an expansive media network. The group once owned a Formula One team and a commercial airline, Air Sahara, which was sold to Jet Airways in 2006 for 1,450 crore rupees. The Sahara Group also made acquisitions in luxury hospitality, including New York's Plaza Hotel and London's Grosvenor House Hotel. Until 2013, the group sponsored the Indian cricket team and in 2010 acquired the Pune franchisee of the Indian Premier League. One of Subrata Roy's flagship companies, Sahara India Financial Corp, would accept deposits as low as 1 rupee. catering to the poor and marginal investors who had limited or no access to formal banking services. Sriram Subramanian and Tamal Bandyopadhyay trace his rise in the Hindi heartland.
A lot of people in UP, Bihar and these Hindi heartland in that sense believed that Sahara group is a big group, and because of the number of agents that the group had, they were able to make a lot of collections of money. Some of it Benami, some of it actual funds. And this mixing of funds with Benami funds and actual funds is what I think led to the entire rise of Subrata Sahara group and Subrata Roy. Obviously, many of these funds were then channelized to legitimate businesses and to have a legitimate face of the group itself, be it real estate development, media, airline.
The key to his success was he is one person who was arbitraging splendidly between India and Bharat. What I mean is this: on the one hand, his relationship with the Bollywood, the film stars, and then the politicians of different hues, as well as the cricketers. The glamour, the razzmatazz, the connectivity. That's the India part. And the Bharat, the hinterland people were in awe of him. And that's how, a bank can raise money, because it has the banking license. So the trust is the key for any transfer of money. In Subrata Roy's case, he earned the trust of Bharat through his proximity of India.
India's capital market regulator SEBI and Subrata Roy entered into a conflict when SEBI barred two of his affiliated firms from raising public funds in November 2010. SEBI accused Sahara India Real Estate Corp and Sahara Housing Investment Corp of raising money through optionally fully convertible debentures or OFCDs without adhering to regulations.
Fall is one part of it, is the first regulator, Reserve Bank of India, which forced him to get out of this business of taking money from people. The RNBC model did not survive. The second RNBC was Peerless in West Bengal, eastern part of the country. There, Peerless took the regulator to court, but in this case, the Reserve Bank of India managed it well through just convinced him and gave him a deadline that beyond that you cannot do. You cannot raise money from public. But the fall actually happened for a very different reason. One of the group companies called Sahara India Real Estate, which was planning to go for an IPO and which had its, prospectus DRHP filed with SEBI, and SEBI found that SEBI found that the optionally fully convertible debenture OFCDs, that particular prospectus it talks about, actually did not follow the rule. It was talking about, there are many investors in it, but SEBI found that no, it's a group of private investors. It was not a public issue. So that was the beginning of the fall.
In 2014, Roy was arrested following a Supreme Court order due to his non-appearance in a contempt case related to the non-refund of over 20,000 crore rupees to investors by two of his companies. Despite being granted bail, his businesses continued to face challenges. He was jailed again, only to be granted parole once again. The Income Tax Department attached the majority of his properties. The passing of Sahara Group Chief Subrata Roy marks the end of an era that saw the creation of a robust business empire. Starting from humble beginnings in 1978, Roy's journey with Sahara India Parivar faced both remarkable success and substantial hurdles. Despite building a diverse portfolio encompassing finance, media, real estate, and hospitality, Roy remained embroiled in legal battles, leaving behind a controversial legacy. An undistributed fund of 25,000 crore rupees is currently held by the capital markets regulator SEBI, which was deposited by Sahara Group for refund to investors. Moving on, the Indian primary market has defied turbulence in the secondary equity market this year, with a record number of IPOs and strong investor demand. As we begin Samvat 2080, will the IPO market continue to dazzle? Harshita Singh finds out in this report.
The first half of the current fiscal year has been robust for the primary market. About 31 IPOs raised 26,300 crore rupees in the April-September period, 76% higher than last year after exempting LIC's 20,500 crore rupee mega issue. 21 of the IPOs were floated in August and September, coinciding with markets making all-time highs. That said, the IPO party is far from over, given the large pipeline in Samvat 2080. Data shows SEBI has approved 30 IPO offers which aim to raise as much as 35,270 crore rupees. Some of the largest forthcoming IPOs from this lot include Ebix Cash's 6,000 crore rupee issue, Indegene's 3,200 crore rupee offer, and Tata Play and Tata Technologies IPOs of 2,500 crore rupees each. Investor appetite is likely to remain strong amid healthy liquidity and strong participation from retail and high net worth investors.
Clearly, volatility will certainly affect the primary markets, but at the same time, what's happening is there are these beautiful businesses who are now tapping the public markets at this point of time through the IPOs. These are businesses who have grown very well, the financials are pretty strong, the business models are pretty robust. And investors are looking for new ideas to invest, and then they come at a reasonable valuations, and which is why we are seeing some good amount of reception in the primary markets at this point of time. We are also expecting this trend to continue for some more foreseeable future. There are a good amount of capital inflows coming into the Indian markets. In terms of retail, HNIs, I think they are pretty savvy investors now. I think they are obviously dictated by the market trends and what happens from a short-term perspective. But there is, we are seeing good retail participation, good HNI participation.
The average number of retail applications in IPOs in the last 2 quarters rose to 1 million from 7,57,000 a year ago. Besides, a sustained rise in domestic SIP flows due to firm demand for equities is also aiding primary market liquidity, said Atul Parekh, CEO of trading platform Bigul. Notably, domestic mutual funds, as anchor investors, cornered 15% of the total IPO issue size in April to September, slightly ahead of FPI's 14% share as per Prime database. Firm listing gains remain another factor, which is drawing both investors and companies to the primary market, experts note. Between April and September, IPOs such as IdeaForge, Utkarsh Small Finance Bank, Netweb Tech, and SBFC Finance debuted with sharp gains of 62 to 93% over their issue prices. Thus, this trend will keep the IPO market buoyant and support investor demand ahead. Today, on November 16th, markets will track global cues ahead of factory output data release in the US.
He's making plans for an early retirement. Business Standard.
Prime Minister Narendra Modi will unveil a government scheme worth 24,000 crore rupees for the development of particularly vulnerable tribal groups on Wednesday. He is on a 2-day visit to Jharkhand and will launch the Pradhan Mantri PVTG Development Mission on the birth anniversary of tribal icon Birsa Munda. Keep watching to find out what the scheme is all about. Particularly vulnerable tribal groups, or PVTGs, are a vulnerable group among tribal groups in India. These groups have primitive traits, geographical isolation, low literacy, 0 to negative population growth rate, and backwardness. Moreover, they are largely dependent upon hunting for food and a pre-agricultural level of technology. PVTGs also collect non-timber forest produce, or NTFP, like honey, gum, bamboo, and wax for consumption, as well as sail. Due to their diet, these tribes often suffer diseases like anemia, malaria, gastrointestinal disorders, and skin infections. It is said that more developed tribal groups take advantage of the development funds, and thus there is a need to direct more funds towards PVTGs. In 1973, the Debar Commission set up a separate category for primitive tribal groups, or PTGs. In 1975, the Centre identified 52 tribal groups as PTGs. In 1993, 23 more groups were added to the list. Later, in 2006, these groups were named PVTGs. Currently, there are 2.8 million PVTGs belonging to 75 tribes across 22,544 villages in 220 districts across 18 states and union territories in India. According to the 2011 census, Orissa has the largest population of PVTGs at 8,66,000. It is followed by Madhya Pradesh at 6,09,000 and Andhra Pradesh, including Telangana, at 5,39,000. The largest PVTG is Orissa's Sahara community, numbering 5,35,000. Interestingly, out of the 5 states holding assembly polls this month, 4 have PVTG populations. These are Madhya Pradesh, Chhattisgarh, Rajasthan, and Telangana, combined with Andhra Pradesh. The 24,000 crore rupees project is aimed at the development of the PVTGs. As part of the mission, basic facilities such as road and telecom connectivity, electricity, safe housing, clean drinking water and sanitation, improved access to education, health and nutrition, and sustainable livelihood opportunities will be provided to areas where these tribal groups live, as these are mostly remote, scattered, and inaccessible. Reports suggest that under the scheme, several ministries will work in tandem to implement development projects. The schemes include Pradhan Mantri Gram Sadak Yojana, Pradhan Mantri Gramin Awas Yojana, and Jal Jeevan Mission, among others. PM Modi will also launch the Viksit Bharat Sankalp Yatra, release the 15th installment of 18,000 crore rupees under the PM Kisan scheme, and inaugurate and lay the foundation of projects worth 7,200 crore rupees in the state.
I will achieve, I will fly high. I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Well, that's all we have for you today. Please log on to business-standard.com for more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.